Hello everyone, this is Greg here. Thank you for watching. And today I want to show you what's happening in the 2DTE option chains. I want to show you the positions in here. Now normally I don't show you options chains that are so close to expiration, but there are so many interesting activities happening here. So I want to show you that today. I want to show you positions from institutional traders and positions from retail traders, and also some YOLO trades. So let's begin. And you will see that there's quite a conflict here between institutional traders and retail traders. Let's start with the vertical positions. Let's look at the spreads here. Now first, to summarize, we have a lot of premium collecting strategies in the spreads and also the iron condors, and we have a lot of directional bets in the singles position, and I'll explain what's happening here in a little bit. Let's start with this position right here. So this is a short position. This is bearish. This trader is essentially betting that the price will not go above 450 within 2 days, and this position is the same, betting that the price will not go above 460 within 2 days by Friday. This one as well. Now, some of you might be wondering, why are institutional traders or bigger firms be setting up such a huge position so close to expiration? So a lot of these positions are actually set up weeks ago, even months ago, before the last earnings report, which I believe was July 22nd, 21st or 22nd. And they were set up this way for obvious reason, to collect premium. As some of you are aware, Tesla generally has high implied volatility, meaning high premium. So if you set up a position like this, you're collecting a lot of beautiful premiums, and especially right before earnings and during earnings, implied volatility will be much higher. Let's look at a chart here. If we look at this chart here, you will see that, so the blue line will represent the stock price and the purple will represent the IV rank. Now, we're not going to talk about the stock price today. Despite the earnings beat, I think there was a big sell-off and started to rise a little bit. But I mainly want to talk about the implied volatility. As you can see here, right before earnings report and during earnings report, around the July 22nd range, implied volatility is at its highest. It peaked right here, actually right before earnings. And that's when institutional players would come in here around this range and set up these strategies that we just saw, and I'll show some more after this chart here. That's when they set up positions to collect a beautiful premium. And as you can see here, right when we come to this range right here, that's where the implied volatility crashed. That's when the IV crush happened a few days ago, about a week ago. And that's why we're seeing all those positions earlier. That's how a lot of the institutions make their profit, by setting up these positions right weeks or months before the earnings report. When the implied volatility is high at its peak, they set up a strategy like this and wait for the IV crush to happen, and they collect their beautiful premium. And that's why at 2DTE, at this range here, we're still seeing a lot of positions left over from a few months ago. These positions are not set up today. There might be a few that's, I don't know, set up maybe a few days ago or a week ago, maybe from market makers or from other institutions. We don't know for sure, but we do know that most of these are set up weeks, months ago to collect premium. So I just wanted to show you these positions to show you exactly how bigger firms are making money from this type of high implied volatility stock, especially Tesla. And let's continue and just browse through these positions. This one as well, big position. And again, unfortunately right now I cannot show you the actual premiums collected or paid for in these positions, but as you can imagine, in the millions, a lot of these positions, huge positions. This one as well. So yeah, and the reason why some of these institutions are not closing their position is because, well, there's a few days left. May as well collect the remaining position. But I can tell you for sure that a lot of the earlier positions has already been exited. If you continuously study the flow in the options change, you will see a lot of the positions has been cleared already, collecting their premium. But yeah, there's a lot of remaining position, leftover positions. And of course, this type of institutional traders, they're constantly prepared. Even if the stock suddenly rises, they're not just sitting around and wait for the stock to breach their short leg. They'll be hedging actively or be exiting depending on the situation. This one as well. Let's continue. Okay, so this is a bullish position right here, closer to the money, betting that the price might go above 355 by Friday. Judging by the size, this is probably also from a firm. Okay, this is we went through this. Okay, so similar on the put side, also to collect premium. These are closer to the spot price. But similar to the call side, a lot of these positions are set up on both sides to collect premium, to collect profits from the IV crush, which always happens one way or the other after earnings report. Again, especially for Tesla. This one as well. Yeah, consistent with what we're seeing on the call side. This one as well. This one as well. Let's see if we can find a hedging position in here. Oh, nope. Yep, actually, most of these are are short positions to collect premium. Now again, these are unique positions picked up by our algorithm. It doesn't represent all of the positions available in the market. I'm sure there are also a lot of hedging positions down here for their long position in their portfolio. But yeah, that's all the positions, spread positions that our system picked up today. Just want to show you that. Let's move on. Let's move on to iron condors, and similar concept as the spreads. Well, essentially the spreads are iron condors. They're just split up in calls and puts, but essentially they're the same idea. Also to collect the beautiful premiums from this type of high implied volatility activities, such as earnings report. And same as the spreads, a lot of these positions are definitely set up weeks, months ago, when implied volatility IV rank is at its highest. Yeah, huge positions, huge positions. Now, if you want to follow some of these positions as a guide or a reference for setting up your own structure, I would not recommend that at this point, because the fun has already passed, IV crash has already happened. Maybe we can do that later. But yeah, big, huge positions to collect premiums, and a lot of the other iron condors they have probably exited already. These are just the remaining ones. Got 2 days left to go, and some of these legs are still far out of the money. Probably why they're still holding on to this position to collect that final last bit of premium. Yep. All right, let's move on to the single side, and this is interesting as well. When we look at single positions on an option in the option chain so close to the expiration, a lot of these are directional bets actually from retail traders, what we call YOLO trades. Let's take a look at. Yep, for sure. And this time I did change the setting on our algorithm a little bit, so we're picking up a smaller contract size to show you what some of the retail traders might be doing at a shorter DTE range. Yeah, so these are YOLO trades. Let's see, this one as well, quite far out of the money, and that's the contradiction we're seeing here. These are situations when we see institutions and retail traders pick sides, where institutional traders have set up positions way early to collect the premium, and they still have left over at the 2 DTE here, and that we're seeing a lot of new positions when coming close to the money from retail traders trying to make directional bet here. So a lot of these positions are sort of like betting on a lottery ticket. If the price does reach these ranges in the next 2 days, they will be making insane return, insane profits. But of course, the risk is also high, because most of the time the price doesn't move much as some of these traders expect. So they'll be losing a lot of money here as well. Now, some of these positions are not that huge comparing to the spreads and the iron condors, but still, it's a lot of money involved in here. Again, I wish I can show you the premiums soon so we can see exactly how much money these traders are spending from both institutions and retail. But yeah. All right, let's continue to the put side. Same here, directional bets. This one as well. Yeah, I just wanted to show you these positions. Very interesting at the 2 DTE range. We see big positions from both institutional traders and retail traders. And in this kind of situation, opposite sides, institutional traders selling positions to collect premium to take advantage of the elevated IV implied volatilities, and we have retail traders buying very cheap options very close to the end of the contract to bet on the big move. And again, for the institutions, it's very nice premiums collected, very good short-term strategy to be used to collect premium, and for retail traders, good strategy for collecting big wins and big profits, but also always remember there's high risk as well. And of course, some of these positions might be could be from institutions as well. It's just a higher risk trade. Just understand the risk if you plan on doing either types of trade. And I'm not taking any sides here, institution or retail, it doesn't matter. I just wanted to show you the position, show you how where everybody stands in the market. But yeah, it's certainly interesting. I'll be doing some videos of shorter DTE option chains just to show you where everybody stand. But yeah, if you have any comments, please leave it in the comments section, and thank you very much for watching. Have a good night.